Yes. And gain or loss will be recognized, that will be transferred to what? PL. This much we have done. Correct? This much we have done. Any doubt? Now you can ask me. Any doubt? No doubt. So we ended with what? Extinguishment accounting. What was the point number for extinguishment accounting? Point number. Point number 4. Means point number 5 I will write down. What was the point number given to extinguishment accounting? 4 or D? 4. Numerical Roman. Numerical. So write down 5. I am continuing with that because one point is left. What is left? Modification. That we have not done now. Modification accounting. Now for modification accounting, Ind AS 109 is silent. Are you getting what I am saying? Ind AS 109 is silent. So it means we need to take the opinion of what? ICAI. Correct. So Ind AS 109 is silent about modification accounting. It means once you become chartered accountant, apply your own accounting approach. However, because ICAI has given two alternative accounting, from exam point of view, you need to follow that two accounting approach. Correct. So I don't two alternative accounting approach is suggested by ICAI. In exam, don't write suggested by ICAI. There are two accounting approach are possible. Don't write suggested by ICAI. Okay? Correct? Understood? The first approach, approach 1, what they say, point number A, legal fee, if any, paid. Correct? Will be recognized as an expense in PL. Point number B, existing liability will be restated at present value of remaining contractual cash flow under modified terms discounted at original EIR. Point number C. The difference between the difference between carrying amount of liability and restated amount will be recognized in what? Recognized in PL. This is the first approach. Correct? Understood? Come to one question. Question number 33. We'll take one question for both what? Approach 1 and approach 2. Question number 33. On first Jan, page number 90. Page number 90. On first Jan, 2000, XYZ Limited issued 10-year bond for rupees 10 lakh. So 10 lakh is the amount bearing interest at a rate of 10% payable annually on 31st December each year. Rate of interest 10%. The bonds are redeemable on 31st December 2009. Means how many year? It is 10 year. 10 year, correct? And so for rupees, how much? 10 lakh. So redemption amount is also how much? 10 lakh. Redemption amount is also 10 lakh. No cost of fee I incurred. So can you see EIR is equal to how much? 10%. Already we know that whenever there is no discount, no premium, no transaction cost. No discount, no premium, no transaction cost. Always EIR will be equal to what? So even though not given, they have given the EIR is there for 10%. On 1st Jan 2005 means after how many years? 5 years. After how many years? 5 years. What happened? What happened? The bondholder agreed to a modification in accordance with which no further interest payment. So now no interest, no interest. The bonds are redeemed on original due date, means the due date remains same 31st December 2009 and amount payable is what now? 16 lakh. So now the amount payable is what? 16 lakh. Understood? This point. So of course now if there will be no interest, redemption will be higher. And legal and other fees. So legal fee paid is equal to what? 50,000. Give accounting treatment. Give accounting treatment. So can we do? Correct. So we are doing approach 1 with this question. Okay? So write down. First so we'll do what? Analysis. That is important now. I mean right now we know that there is no substantially different term, but in exam you need to prove that. The first analysis of substantially different terms. So देखो, analysis of substantial different terms. Go A. A is equal to what? Present value of contractual cash flow under what? Under modified terms discounted at what? Discounted at original EIR, that is how much? 10% plus what? legal fee paid, correct? So can I say there is only what? One cash flow, that is 16 lakh after 5 years. So we'll find out present value of what? Redemption value. Present value of redemption value after 5 years. After 5 years now. Correct? So that is equal to 16 lakh multiplied by, can you give me 0.6209 is equal to 9 lakh 93,440 440 plus what? Legal fee. Legal fee paid is equal to what? 50,000 is equal to what? 10 lakh 43,440. So this become A, correct? Then we'll find out B. B is equal to what? Present value of remaining contractual cash flow under what? Original terms discounted at what? Discounted at 10%, which is equal to carrying amount of existing liability, so which is equal to 10 lakh only. 10 lakh, but how much difference? Difference is equal to what? 43,440. This is what? A minus B, correct? A minus B. So can I say this 43,440 is how much percentage of 10 lakh? But the percentage of difference to what? Existing liability. How much? 4.34, which is not more than 10%, which is not more than, so it is not more than what? Not more than 10% of B. We can say in this way also na, not more than 10% of B. Therefore modified terms are not substantially differ than what? Original terms, correct? Hence entity should follow what? Hence entity should follow which accounting? Modification accounting, correct? Understood? ठीक है, तो बताओ. Now we'll follow modification accounting. Correct? So we are following approach 1. Approach 1. There are two approaches now. We are following approach 1. तो बताओ. How much legal fee of rupees 50,000 will be recognized as will be recognized as an expense in PL. Correct. Second, but the liability will be restated. Liability will be restated at what? Present value of contractual cash flow under modified terms. Under modified terms using which EIR? Original EIR. Original EIR, that is rupees 9 lakh. Already we have calculated 9 lakh 93,440, correct? 9 lakh 93,440. So what will be the accounting treatment? Accounting treatment. बताओ. First, what is the legal, or we can say modification expenses? Modification expense account debit to cash or bank. How much? 50,000. 50,000. This journal entry we are doing on 1/4, correct? 1/1/2005. Then 1/1/2005, the liability will decrease. Initial liability was 10 lakh, now reinstated at 9 lakh 90, 9 lakh 93. What is the difference? Difference what? बताओ. Loss on modification. Loss on modification. Sorry, gain है. Liability decreases ना. Sorry. तो it was what? Bond ना. तो bond account debit to gain on modification. Gain on modification. What is the difference? 6560. 6560. This is nothing but 10 lakh minus 9 lakh 93,440. Correct? Then on 31st/12/2005, this will be transferred to PL. PL account debit to modification expense. How much? 50,000. 50,000. And gain on modification. Gain on modification to PL. How much? 6,560. Correct? And also on 31st we should recognize now interest expense. So interest expense will be now on which amount? 9,93,440 into what? 10%. That is how much? 99,344. To what? To bond. 99,344, and this will be also transferred to PL. Then this is the first approach. Correct? Any doubt? Easy. So this is not given in Ind AS 109. We are doing as per the suggestion given by ICAI. Correct? But what can be the second suggestion? First suggestion I have given. Second suggestion, what do you think? What can be the modification accounting from your point of view? In the same question, what can be the alternative treatment? Legal expense? Legal expense? Huh? Legal expense, what will do? We, then what will do? Huh, correct. Will not treat it as expense. 100% correct. So what will do? Means legal expense will be treated as what? Will be treated liability. It is paid. So legal expense paid, can I say, will be deducted from liability? The liabilities will decrease and will need to calculate what? New EIR. We need to calculate new IR as per the new terms. As per the new terms. Correct? So this is second approach. Write down. This is approach 1 we have written. Now write down approach 2. You have written यहाँ पर ना. This is approach 1. Now approach 2. Write down. Approach 2. Point number A. Legal fee paid, if any, will be deducted from existing liability. Point number B. EIR will be recomputed as per modified terms. Same question will take question number 32. But if you permit, I want to make one changes so that the question become more interesting. Can I make the changes? I mean, right now question is very easy. So question number 33, sorry. Can I change the question? थोड़ा सा बोलो. तो same question but write down. Suppose but what I will do? I'll give what? Transaction cost initially. So that now we need to calculate what? EIR. Suppose in question number 33, transaction cost of rupees 50,000 was initially incurred on 1/1/2000, correct? Therefore EIR will not be equal to what? Therefore original EIR add-on. Therefore original EIR will not be equal to 10%. And suppose EIR is not given, so we need to calculate it. So only one changes, and you can see that with one changes the question can become what? More interesting from exam point of view. Only one changes, so the solution will become lengthy. the solution will become lengthy. Correct? So most probably they will give same EIR in exam because they have given 3 questions in ICAI book. In all the 3 questions, same EIR. Correct now? We have done 3 questions now. Last class we have done 2 questions. This is the third question we are doing. Correct? So in all the questions there was same EIR. So most probably in exam they will give same EIR, but I am just doing it. If not given, if transaction cost given, so what will be your answer? So can we continue? Solution. So this is solution started from this. This is the part of the question. Huh? This is the part of the question. I have not taken assumption. I have added this point in the question only. Correct? So can I say first we need to calculate original EIR. Now calculate original EIR. So point number 1. Calculate original EIR. Correct? Understood? So we'll find out present value of contractual cash flow under original terms discounted at 10%. Can I say discounted at 10% will be equal to 10 lakh only? There is no need to calculate. There is no need to calculate. But now 10 lakhs to be compared with 9 lakh 50,000. 9 lakh because proceed is 9 lakh 50,000. Proceed is equal to 9 lakh 50,000. Correct now? Understood why it is 10 lakh? Correct now? So we'll now increase what? Rate of interest under original term discounted at, let us assume 11%. So batao, this will be equal to what? What is the interest? 1 lakh for 10 years. Can you give me annuity factor at 11% for 10 years? $5.8892 plus 10 lakh. Can you give me present value factor for 10 year? 0.3522. What is the present value? 9,41,120. 9,41,120. Correct. So now we can calculate EIR. EIR is equal to 10% plus 10 lakh minus what? 9 lakh 50,000. Understood why 9 lakh 50,000? Because 50,000 is the transaction cost initially. Okay. Then 10 lakh minus what? 9 lakh 41,120 into difference. Difference is 1% is equal to 10 point. How much? 10.85. So 85 is, can we take 85%? 10.85%. So this become original EIR. So your one step increased. So 1 marks will be increased. Correct. Then what will calculate, batao? Can I say now we want carrying amount as on the date of modification. So now it will not be equal to 10 lakh. Now we need to find out what amortized cost. So second step increase, 2 point increase, 2 working note increase. So write down calculation of carrying amount of existing liability as per original term. As on which date? 1/1/2005. So either you can follow what? Amortized cost method or discounting method. What do you want? Discounting method means discounting of future cash flow. What do you want? Either what? Forward method or backward method? Discounting method. You want discounting method? Radam. It means we need to find out present value of what? Remaining contractual cash flow under which term? Under which term? Under original terms, discounted at what? Discounted at what? 10.85%. The first, for interest payment. For interest payment, तो कहने से interest payment is 1 lakh multiplied by present value annuity factor for 10.85% for how many years? 5 years. So can you give me 1 lakh multiplied by 3.7099? How much? 3,70,990. Then for redemption value, so under original term it is 10 lakh multiplied by what? Present value factor at 10.85% for 5 years. How much? So 10 lakh multiplied by 0.5975 na is equal to what? 5,97,500. So it become what? This is the carrying amount of existing liability, 9,68,490. Correct? So because of the changes in the question, 2 point change, 2 more working note you need to do. Otherwise this was not required. This 2 working note was not required. Correct? I am just doing this question so that if in exam they ask, you should be able to do it. Then once again analysis will do. Of course it will not be substantially different for this question. But then also in exam so we should write down now, because in exam we don't know which question they have asked. Okay? So analysis of substantial different terms correct. The first point number A is what? Present value of what? Contractual cash flow under which term? Under modified terms. Discounted at what? Discounted at 10.85% plus what? Legal fee paid. ठीक है, तो बताओ for interest payment, whether there is any interest payment under modified terms, any interest payment? Bolo? No, nil. For redemption value, So now what is the redemption value? It is 16 lakh. 16 lakh multiplied by 0.5975 is equal to what? 9 lakh 56,000. So this become total 9 lakh 56,000 plus what? Plus legal fee paid. How much legal fee paid? 50,000. Correct? So what is A? A is equal to 10 lakh 6,000. Correct? Now B. B is what? Present value of remaining contractual cash flow under what? Original terms. Under original terms. Discounted at what? 10.85%. Already we have calculated. How much we calculated? 9 lakh 68,490. Correct? How much difference? Difference is A minus B. How much difference? 37,510. Correct? बताओ. What is 10% of B? 10% of B is what? 96,849. So can I say, therefore, A minus B is less than what? 10% of B. Therefore, what? Modified terms are not substantially different than original terms. Hence, entity should follow what? Modification accounting. In exam, if question is silent, give both. Approach 1 and approach 2. However, question will be silent only. Okay? Understood? Then, now we have, in this question, we are following approach 2. So, accounting treatment. Now we are following accounting treatment based on what? Based on approach 2. Based on approach 2. Without. First, point number 1. Can I will pass one journal entry? Bond account debit to cash or bank with the amount of transaction cost, legal fee paid. So being legal fee, this journal entry you have done on which date? On 1/1/2005. Being legal fee paid adjusted with what? Adjusted with liability. Then, but we need to recompute what? EIR. So, what is the revised carrying amount after this? Revised carrying amount of liability is equal to what? What was the carrying amount? Mhm. What was 9,68,490 minus what? 50,000. So now it become 9,18,490. Correct? So point number three. Now we need to calculate what? Calculation of revised EIR due to modification. Due to modification. Correct? बताओ. Present value of contractual cash flow under modified terms. Under modified terms, discounted at, already we have done discounted at what rate? 10.85%. So how much we have calculated? We have already calculated 9,56,000. Correct? Already we have calculated at 10.85%. So we are writing that first. Correct now. Now we should compare this with this amount. So we should increase what? The rate of interest. So let us do at 12%. Present value of contractual cash flow under what? Modified terms discounted at 12%. So can you give me 16 lakh multiplied by, because there is only redemption value, 16 lakh multiplied by what? 0.5674 is equal to 9,07,840. Correct? Understood? So bata, what will be EIR? Can you calculate EIR and give me EIR? What is the EIR? 11 point, 11.7 na? 73. So let it make, can I write down 75? 75 can I write down? 7, 3, 75. Okay. 11.75%. The difference is 1.15%. Huh? Difference between the two rate is 1.15%. Done. Then if they ask, means then you will pass the journal entry of interest expense. If they ask only accounting treatment of 1 year, so only 1 year account means interest expense journal entry due at the year end. Done. But suppose they ask calculation of amortized cost under modified terms. Write down only if required. If they ask, will do, otherwise will not do na. So if they ask only journal entry of only 1 year, they will pass only interest expense journal entry over. Okay? So normally they ask this also. So year end. We will start with now 31st/12/2005, then 6, then 7, then 8, and then 9. Then we'll write down opening obligation. So now opening obligation is what? 9 lakh 18,490. So now we need to calculate interest at what rate? 11.75%. Then contractual cash outflow, then closing obligation, correct? So can you give me interest, Patafat? First you calculate, then I will calculate. Write down. Give me interest expense of each year. Done? Bolo, what are the interest? 1 lakh 923. Then second year interest 1 lakh 20,603. Third year 1 lakh 34,774. Then fourth year 1 lakh 50,610. Last year 1 lakh 67,600. Exact balancing figure. Okay. So of course closing obligation you can write down by your own. Understood? So contractual cash outflow is only what? Only 16 lakh, correct na? So I think you have understood. In exam, if you have time, suppose they ask this question, you have time, give both the approach. However, this is very simple. Both the approach are very simple and will not take much time. It will not take much time. After analysis, both approach will not take much time. Correct? So if you have time, give both the approach. If you do not have time, then give one approach. So you need to give only either one or two, whatever you like. Because that is a suggestion. So in exam, you can pick one suggestion. Correct now? So any one alternative answer will be correct only. They will not deduct marks for that. But we don't know institute. They said, I have given two suggestions. Why you are doing one suggestion? Correct? So this was what? De-recognition. Correct? De-recognition we have done. But sometimes de-recognition is due to exchange with equity shares. There are sometimes means I have done now either discharge or cancelled. If discharged, so paid cash or bank. If cancelled, then transfer to PL. If modified, we have done. If exchange means liability is exchanged by allotment of what? Equity shares. Instead of liability, we have allotted equity shares of the company. Equity shares of the company. We have done in internal reconstruction, debenture holders, we are given what? Some portion equity shares, some portion what? मॉडिफिकेशन ऐसा हुआ था. तो if there is what by issue of equity shares, then what will do? तो continue. This was point number, modification accounting was point number 5. Point number 5. So write down point number 6 in this only.